thanks everyone for joining today. The meeting shouldn't be much more than an hour. What we're trying to accomplish here today is kind of go through some of the items that we've covered, and then kind of determine, what's in, what's out, where do we want to go from here. My goal for the next meeting of the entire task force, June 4th, is to probably have some draft language of potential recommendations that we want to move forward to the entire committee. Now, these recommendations, we're not going to get into details as to how bills that are going to need to be drafted or how they're written. They're going to be more kind of broad-based, recommendations as to items that we might want to push forward and discuss and get ready for our report. And so that would be my goal. And we'll probably, after this meeting, we'll have another meeting, at least one more meeting, possibly two, before June 4th to maybe get down into the weeds a little bit more on some items that we may not have, that we may have some more detailed interest in, and that we can move forward. So that's kind of the agenda today. Probably not really going to have a show of hands on voting for stuff that's in and out, but probably just more of a general consensus. If we want to move something forward, are there any objections or not? Kind of issues, just kind of do it like that informally. Probably kind of request those members of the committee too to turn your cameras on, that they can, so as we start, debating some things, that we can see each other. So with that, Ralph, you want to throw up that the more detailed agenda that you and I went through?
Yes, I can do that. Let me get this to hit the page with better, and then we'll share. Where's that?
Yeah, the agenda that it went out was kind of more of a just bullet points, and yeah, that's the one. This one's got a little more
so yeah. Okay.
Yeah, got a little formatting issues, but no big deal. It's so basically, just we kind of wanted to go through what were our initial interests. We talked about some local non-levy revenue receipts and how that might integrate in the local budgets. I think that was just more informational. We also, oops, better turn off my alarm here. We also talked about timing considerations on mill levy elections. That's been kind of pushed off to the education subcommittee. They're working on that. And then we also got into mechanism for controlling tax growth, such as Senate Bill 511, how that worked with TIFs, SIDs, bond limits, etc. We also looked more into the property tax assistance programs, PTAP, the veterans programs, elderly home owner credit, etc. We had the presentation on the local option sales tax, and then talked about assessment tax limitations. That kind of ties in a little bit more back with 1510-420, Senate Bill 511. It talked a little bit about fixed mill levies versus dollar amounts, and adjusting those for inflation. So those are kind of the things that we went, our initial points of interest, I guess. And then of course, we reviewed a number of these in a little more detail. We talked about data from the local government service bureau, and where a lot of the information that's kind of being placed from local governments to the state for people to review. And I know the state's kind of looking at that and kind of getting a better format, I guess, in collecting that revenue. So it's easier to look at. And of course, like I said, we talked about the property tax system programs, tax increment financing a little bit. I see Eric, I think Eric was on here. The last chart, one of the charts that he showed us previously had an error in it. Probably let Eric kind of discuss that a little bit also. And then we also talked about taxable values and the 1510-420 new new property versus other property. And kind of this is all kind of a duplicate. We also talked about the caps, Prop 13, like California caps, which was in Montana. We looked at CI 121, Senate Bill 542 from the last session, and then local option sales tax, TIFs, and special improvement districts. We dug down into that a little bit. So kind of what I'd like to do now is just kind of, kind of reminded everybody kind of what we went through in and out. Is there anything out there I might have missed or kind of blew past a little bit too quickly there? I don't know if anybody else wants to chime in a little bit before we get into anything else here. Feel free to turn your mic on and just speak up or raise your hand. So I don't really see.
Senator Hertz, I was just curious regarding short-term rentals. Is that over is there another subcommittee looking at that issue, the tax rate on short-term rentals?
Yes, there is. The Tax Fairness Subcommittee, they're kind of looking at the homestead and comstead exemptions. And so a short-term rental would not qualify for a homestead exemption. And so, and being like any second home, they'd be paying a higher tax rate, effective rate than a Montana resident homeowner.
Are they looking at increasing the rate on short-term rentals?
Not necessarily. Basically, what they'd be looking at would be if we bring in a homestead exemption, there may be an upward adjustment in the tax rate for all class 4 property. It's kind of difficult to discriminate between types of class 4 properties unless you set up a new class. So what they do, they potentially could raise the rate on everybody, and then for the homestead exemption, your personal residence, you would get an exemption up to a dollar amount. Let's just pick like the first $300,000 would be tax exempt on the value of the property. So that would lower your effective rate, and effectively it would shift a higher rate onto short-term rentals, second homeowners, et cetera.
All right.
That's what a number of states do. It seems to pass the constitutional muster of not discriminating against similar taxpayers. All right, so let's just maybe kind of start working through a few items.
Senator Hertz?
Yes.
Mr. Smith raised his hand.
Okay, yeah. DJ, go ahead.
Yeah, on that front, do you know if they're following a similar process to us, voting that through? So like you're narrowing it down, have they narrowed it down, or if they're having a vote on that, when is that happening?
Yeah, so you'll have to look at those. If you go to the website, I'm not sure when the next Tax Fairness Subcommittee meeting is. Do you know off the top of your head, Ralph? Have they scheduled?
We have not set one yet. We are working with that homestead, comstead exemption model. With the education committee, they're trying to link it in with the education effects so you can see that. But the other thing that they're doing differently is they're setting up two-tier rates, up to a lower rate for the first fixed amount of money based on the median value, some function of the median value of a home, and then a higher rate for things above that. So it's not even so they're looking at the exemption, but they're also looking at a way that sort of creates a low effective tax rate for the first amount, and then it becomes a blended rate to a higher rate later after a certain threshold. Yeah.
And DJ, if you just watch out, and Brandy's been really good about pushing out emails. You should be getting those about when the other subcommittees are meeting. And then
I've been watching. I just didn't want to make sure that there was a vote that happened that we weren't a part of. So thank you.
Well, and I mean, basically these subcommittees, we're going to push everything to the committee of the whole, our recommendations. And once they get there, then it's like, as a member of the committee of the whole, that's when we're going to say, we don't want to continue to push this forward or make this recommendation. And the other task force that I've been on too, you're not going to get a unanimous approval on every recommendation, which is okay.
Of course.
You know, so that's kind of what we'll go. Senator McGilver, you have another comment?
Yeah, what about, I had brought up last time we met regarding nonprofit entities like credit unions and hospitals that are revenue generators. They're not really like a church or a charitable group that just gets donations and does the charitable thing they do. Have we gone into any more? I think there was someone that was going to look at that, or what other states might be doing. Are we anywhere on that issue?
Yeah, we are. And actually, Manish is on the call. Manish sent me an email. Manish, do you want to kind of summarize what's going on across the country in regards to possible property taxes or fees on nonprofits?
Absolutely, Senator. Thanks, Senator McGilvery. I did look into that for you, and I don't have all the details, but there might be an opportunity to look at what North Carolina is doing, but just sort of writ large. As you know, obviously, many of these large nonprofits are not paying property taxes. That's not to say these large charitable organizations are not subject to tax in many states. They're actually subject to sales taxes, which obviously wouldn't apply here. There may be a case, though, to apply a property tax to sort of a segment of the charitable nonprofit. So let's say you have a leased space to a food vendor in a charitable nonprofit that's not really part of the core activities of the nonprofit, and applying a property tax to that nonprofit organization may be appropriate so far as it doesn't frustrate the overall charitable activities of that nonprofit. It also might be appropriate to say apply property taxation to the rental properties of a charitable nonprofit, again, provided there's not frustrating the core activities. A lot of states use payments in lieu of taxes. I know that I believe sort of looking at 2012 data, Missoula had at least 2 nonprofits that were paying payment in lieu of taxes. Sometimes I'm not speaking specifically to Montana, but in some places around the country, these are sort of seen as tacit requirements. And so if you were to sort of institute more programming around payment in lieu of taxes, pilot programs, it would just be important to make sure that they are voluntary by their nature. And the last thing I would say, Senator McGilvery, is I know there was a bill that was considered, I believe, in 2023. I don't believe it advanced out of the legislature, but it had to do with funding local services through a fee structure on local nonprofits, and that might be something to sort of resurface and reconsider. I hope that's helpful, sir.
Thank you.
Kendall, do you have a comment?
Yeah, I was just gonna mention, this was something that I think was definitely brought up during the legislature last year. And I think that there was a bill passed from Bob Keenan. It was House Bill 45. And it was intended to start the process of the Department of Health and Human Services promulgating rules to provide oversight over charity care and community benefit of nonprofit hospital systems. And I think, if the committee is going to go down this route, I think it might be worthwhile to go check in on how that process is going. It says in the bill that they're supposed to promulgate rules by July of this year.
Okay. Yeah, thanks for that update. Yeah, that was a lot of conversation going on in the last session about what type of values are nonprofits providing to the community. And basically meeting their nonprofit statute. If we're going to give them tax exemption, are they providing direct benefits back to the community? So I think that's kind of what Senate Bill or House Bill 45 was kind of digging into a little bit, getting a little more information. So, all right. Any other comments, thoughts, Ralph?
And Eric can correct me. It's my understanding that in the case that Manish referenced of a commercial vendor inside a not-for-profit space, that area is subject to taxation. I think in Montana we do carve out unrelated business income of not-for-profits. Those areas are carved out and taxed. Is that correct, Eric?
To the best of my knowledge, yeah, that's correct. So there's the idea of beneficial use. And if the beneficial use is not part of the nonprofit organization, then that is subject to property taxation.
Yeah, I think that might be happening up in the Flathead. I know the hospital up there some time ago purchased a activity athletic type center, health club. And, I'm not sure exactly the status of that, but there was a lot of discussion up there at that point in time. All right, so yeah, great conversation. So let's try to maybe move through and kind of talk about a few items that might be in or out. Kind of just looking through here, the current property tax assistance program. So we had looked through those. We talked a little bit about them and talked about means testing and looking at increasing the thresholds and availability, maybe to expand those to more individuals' access. So, to me, that kind of makes sense. The legislature did look at that last time we raised some thresholds, but it probably needs, with the speed of inflation that's been happening over the last couple of years, is probably something we need to continue to look at. Does anybody have any thoughts about those current property tax assistance programs and looking at indexing those? Senator McGilvery?
Yeah, when we're talking about means testing, what my mind immediately goes to is an asset test.
Okay.
In that your income might be low, but like I said, well, your taxable income could be quite low. Could have tax-free income, other income that's not taxable. So I think some means testing, specifically with an asset test, I don't know how that gets done, but that's where my thinking goes.
Okay. Representative Fern.
Good morning. Thanks for having me on. I agree with the means testing is an important part of this. I think one of my concerns is that the benefits we do provide with the elderly homeowners and PTAP, I think does a reasonable job of looking at the plight of low-income folks facing high property taxes and affordability. I do think that reaching into kind of like the closer middle-class folks, people who make what appears to be a reasonable income, but the impact of the appraisals have made the affordability be an issue. It's just something that that this subcommittee should look at as far as eligibility factors go. And perhaps if we work with the homestead and Comstead exemptions, we may take care of that. But I think to have two working together might be advisable.
Yeah, thanks for the input. Yeah, I think the homestead exemption will probably get at that probably more than other types of I guess tax credits or something like the elderly homeowner credit. All right, so I think, sounds to me like it's probably kind of a consensus of the group that probably one of the recommendations we want to move forward is to just look at the taxpayer assistance programs and ensure that they're being adjusted for inflationary matters and trying to maybe reach a little broader population in the state. So Ralph, if you want to I'm keeping notes here too, but if you could kind of also jot stuff down as we go along. I'm just going to kind of go through these issues that are right on the list. Discussion of tax increment financing. Eric, could you kind of give us a summary? The last time you presented that chart to us in regards to taxpayer increment financing, I think you had an error in there.
Absolutely. Yeah, so what I did in that last chart was I looked at the types of newly taxable property that were in the TIF increment districts, and that was based on request of, people wanted to know what types of property were in there. And so I gathered the information that we had available. And then during the committee, it was pointed out that it was interesting that residential property made up such a large share of the newly taxable values in those increments. And I too thought that was interesting once it was pointed out. And so I dug a little deeper into it, and it turns out that there was a typo and those were actually mislabeled. So a majority of the newly taxable property in TIF districts is actually from class 4 commercial property, which generally makes more sense when you think about how TIF districts are structured. So
Yeah,
that
no.
needs to be considered. I believe Ralph updated the information that is on the website, so we should be good there. And I apologize for any confusion that might have caused.
Great. Well, I'm glad we got down to that because, yeah, it did seem to be a little,
Yeah.
it didn't make a lot of sense. So that's good. So on TIFs, of course, I've been involved in TIF reform for a number of sessions. And I think we're still there's a working group out there looking at TIFs of business owners and a lot of discussion at local governments. But I think, in my mind, some of the, things that we've seen in TIFs are the definition of blight, the life of a TIF, how long should it live? Should you reestablish the increment base as time goes on? So that and just so that overall general taxpayers can see an advantage. I mean, the TIFs are there to create and improve economic development, but at the same time, we want to make sure that those funds are being spent and all other taxpayers benefit too from potentially bringing on new taxpayers and reducing property taxes overall. So, does anybody else have any comments, thoughts about TIFs? If that's something we want to continue to maybe move along with some recommendation of a little more analysis and details. Does anybody object to continuing to, maybe look at TIFs a little bit more and making a more general recommendation?
I don't object to that. I think it's a good thing to do. And I would also just swing back around and talk about TIF's ability to bond. I mean, if they did a bond that, say they have a 20-year bond and they pay it off, do they get it just at 21 years, create another bond and then last another 20 years? And so I like the idea of particularly looking at increasing the increment over time, reestablish the increment over time. At some point in time, I mean, and then the whole city benefits from the goal of the TIF.
Right. Okay. Anybody else have any thoughts? All right, so I think that's probably another item that we can move on is we'll just call it, looking at TIFs and making some recommendations for possible improvements in that arena. So the next big item is obviously 1510-420. We've kind of looked at that, and also I would combine with that from the last session Senate Bill 511, which put a overall cap on more or less an overall effective type cap on 1510-420. I think at that point in time, the number that was picked, I think, was 4.75% overall effective cap. I think it allowed full inflation, but then it had a cap on it. And then I think also bringing into that is something that we had talked about too. What's in an overall caps when we talked about special improvement districts, and then we also discussed fixed mills versus a dollar amount. So I think all those kind of play together, and 1510-420 in my mind would be a much more effective tool if all the mills, floated up and down, so that they just not fixed there and they get a revenue surplus just due to appraisal increases. So I think that's kind of an overall broad topic. It's not it's complicated. as you know, it's probably one of the most complicated things in our property tax system. I don't, does anybody have any thoughts on out there about, you know, solutions, potential going forward on 1510-420 and Senate Bill 511?
Yeah, I'll just chime in here. I think that, you know, working on improving this limitation in, you know, this section of code, I think is probably, in terms of bang for our buck, probably the most important thing that this committee can focus on. And I think, you know, we really ought to dive into why Senate Bill 511 failed. You know, what can we do to improve the bill, to bring it back in 2025? How can we improve the concept too, and make a more robust limitation? I think that that's something that, you know, the other committees aren't really looking at, and we're especially well suited to take on.
Yeah, I would agree. I think part of the problem in the legislative session, it was a complex situation, wasn't explained well. Another part of the Senate Bill 511 too was requiring a certain percent of the new growth in your community to reduce taxes. So that is just always increase your total overall budget. So Representative Beatty. Yeah,
Thank you, Senator Hertz. So just perspective from the Education Subcommittee. As you're looking at 420, the place I think that we should go is to remove the reference to the education and 95 mil levy from that statute and focus strictly on cities and counties. We can always come up with a separate statute because of the nature of the budgeting and the funding flow for cities and counties versus the public schools is completely different. We're going to be hearing at my subcommittee when we meet on the 23rd a report from what's been going on in the Revenue Interim Committee and the Education Interim Committee, who are both looking at the 95 mil levy. And I'm not sure what where they're going to be coming from, but we're going to try to pull all that together and we can report back to you on the 4th.
Great. Representative Fern.
I think this is reform of 1510-420 is really worthwhile. But the thing that stands out to me most is that we try to have one statute that fits all the really varied needs of counties across the state. And I would break them up into high growth, kind of slow growth, and no growth. And so, you know, if you pick the difference between Phillips County and Gallatin County, one having probably to depend mostly on half of inflation, and one having that prior year's growth plus half of inflation built into it, there's just no comparison. And I think if you consider some of these smaller counties, you know, I don't even know how they keep up with payroll, even if they're just, I mean, even if they have a limited sheriff's department, I would assume most of their budget has to go in just to keeping the status quo if they can. So I think one of the main tenets of 511, looking at inflation, is certainly appropriate. But again, the more we recognize the differences in demographics of our county and our state, I think that's making an important step forward. As to the impact on the taxpayer, you know, I mean, I don't know. I mean, like here in Flathead, they didn't use the maximum amount of mills. So it would be interesting to know, and maybe you guys have already looked at that. It's looking at your high growth counties, how many use max mills, you know, and how many do not. But I think for a place like Flathead, it probably wouldn't make that much difference because county commissioners are being really careful with the dollars.
Yeah. Commissioner Palmquist.
Yeah, I just wanted to chime in on that. As a large county, I can tell you that we have struggles too. Even though you think maybe the small county has more trouble because they don't have growth, we have trouble because we have growth. So at the end of the day, we need more money too to provide the services that we have. We're just going through our budget process right now and trying to think about how we're going to give raises to our employees and how to keep employees. And because of the 1510-420 cap, which we all have, even though we have more growth than the little ones, we're still struggling. Whoops. we're still struggling with maintaining a budget because we have to pay higher wages to keep people. And so the idea that smaller counties are suffering more than bigger counties is, I don't think that's true. I think it's across the board. We all suffer from shortfalls in our budget because of our cap. Yeah, we left some mills on the table last year, and we may be regretting that because, like I say, our budget's coming in, the gas and fuel went up, inflation. I mean, it's all starting to add up. And so we all struggle, some larger than others. That's all I'm saying. Thanks.
Yeah. All right, any other comments on 1510, 420, Senate Bill 511? It sounds to me like the consensus of the group is continue to move that recommendation forward to look into 1510, 420 and Senate Bill 511 limitations, particularly how they might work, particularly when you're looking at different needs for different counties across the state, which is always difficult. So we'll move that one on forward. The next item that we kind of talked about or just looked at was county non-levy revenue. I didn't really see anything that was kind of more of educational process. I didn't really see anything that really popped up on that or anything that we need to move forward on that unless I'm missing something. Anybody else have any thoughts on that? All right, we'll probably cross that off our list. It's nothing that we need to continue to go forward. Next item would be the Prop 13 California type initiative that would cap valuations and cap taxes at a % of your valuation. We've had a lot of discussion on that, a lot of education, at least in the legislative session and an initiative. That does create problems. It's kind of has unfortunate effects on different taxpayers in different communities. You know, you might have a $500,000 house on one block and the same value house on another block, and they have significantly different tax rates and paying significant taxes, which can create some problems. So does anybody have any thoughts, comments on Prop 13 type initiatives?
Mr. Chairman,
Yes.
Errol Galt. I'm the one that kind of threw this out. So I did a lot of research on it, talked to quite a few people about it, and came to realize that you know, potential constitutional complexities and our rate base, you know, the different rates that we have in our property tax system, probably pretty much took that possibility out. So I personally don't see any need to push this forward anymore.
Anybody else have any thoughts about that? I would agree with Commissioner Galt too. You know, the more I look at this, it just doesn't make sense, doesn't really work for Montana. California's kind of used it. Of course, they have a statewide sales tax too. That's basically used backfill for theirs. But so without any objection, I think we can cross that off of our list to something that we don't need to move forward. All right, so the next big item is the local option sales tax. We had a great presentation on that, in what the possibilities of that might do. I think we saw some examples of what's going on. We also saw a little more details that, you know, you get into your bigger communities, of course, it's not like the resort tax, which they have a lot of tourists there. A lot of the tourists in the bigger communities are local Montana folks that are moving around and pay this tax. So does anybody have any thoughts on the local option sales tax?
Yeah, I'll chime in. I think that, you know, and this is just my personal view, but I just really don't think that it's worth it for this committee to continue to consider a local option. I think a couple of reasons. You know, the governor's been really clear that he doesn't want sales taxes. And I think the second reason is, you know, we're supposed to be focused on addressing property taxes. And I just think it's the wrong approach to be looking at how do we add a new revenue stream, non-property tax revenue stream to these local governments. So personally, I think that this is something that we should, leave for discussions for another day and focus on the property tax side of things.
Senator McGilvery? Tom, you need to unmute yourself.
Sorry.
No problem.
I will partially agree and disagree with Kendall. I mean, yeah, the governor took it off the table, but it's clear to me that anything we do other than 1510-420 and the SB 511 type idea, I mean, ultimately to limit the growth of property tax, you got to limit the growth of government. There's no other way around that, or else find another revenue source. And if we do a homestead exemption, we're increasing somebody's taxes to pay for that. So we're just increasing, we're basically making the, we're essentially increasing the property tax on higher valued property or out-of-state property in some way to reduce the tax on a lower valued home or a residential property, et cetera. You get what I'm saying?
Yeah.
In doing that, you continue to exacerbate a problem that only the higher income you have, the more of the burden you take, and the lower your income. In other words, half the people aren't paying any income taxes at all, and so we try to keep their property taxes low. So you continue to exacerbate this problem where you have fewer and fewer people paying all the taxes. That's a problem I see. That said, the only way you're going to fix that is some kind of a sales tax in Montana. My ideal world would be to have that 4% sales tax on everything that moves and eliminate the residential property tax entirely. But that's a dream world. We're not going to see that. And the presentation we had, it was complex. And after all was said and done, I didn't see that the property tax relief was significant enough to justify the local option tax. So there was not a good trade. And another thing we can't get to, like in Billings, we get so much out-of-state traffic from northern Wyoming in our retail establishments here. And you can't catch that without doing some kind of an e-commerce tax. I mean, you can't tax the e-commerce. So if you tax the local retailer and not tax the e-commerce, you just push more business to the e-commerce. So again, I agree with Kendall, this is complex, probably not going to work. But I also say that we're pushing against a problem that we can't fix with the two sources of tax revenue we have, which is property and income.
Thank you. Representative Farron.
Thank you. Sorry I missed the presentation last time. So I see this working very well in a resort community, and I realize that's a subsector of communities in the state. I get that. But I have been a very strong proponent of trying to develop a tax system that best reflects how our economy actually works. And whether we like it or not, tourism and visitation is an extremely significant portion of our economy. And likely, if you're on the I-15, I-90 corridor, along with some of the resort communities, we're basically leaving a lot of money on the table of folks who are literally coming in and saying, I want to give you money, but you don't have a way to accept it. I'm happy to give you money because we love being here. So I don't think a local option is for everybody, and that's why it's an option. I do think that it gives you the flexibility to do many creative things to make it work in a more effective manner for local folks, what you tax and what you don't tax. I think you can be pretty generous on your rebates, that it does make an impact, and it should. And I think the other thing it does is it helps with infrastructure, which seems to be very much a bipartisan need in our state, and it's difficult to ever get enough. So obviously I'm an advocate I probably would prefer a more holistic approach of a statewide sales tax to mitigate other taxes. But since that's off the table, and that seems to be in a bipartisan manner off the table, I guess I think the subcommittee should at least consider moving it forward. Thank you.
Commissioner Holmquist.
Yeah, I know in one of our meetings, and I might have been equity and fairness, it was brought up that number, and maybe it was in the main committee, but anyway, it was brought up that at a 4% sales tax, it was not enough to cover the property taxes, to get rid of property taxes. It didn't pencil out. So I guess it's a hard thing to figure out, right? But at the end, we're still gonna, if we have a resort tax or whatever it is, we're still gonna affect the local people because they're gonna have to pay part of it too. So we're still raising taxes to try to give them back a rebate of some sort when, it's kind of, what do you do, right? It's a tough situation, but I kind of agree with Kendall that it's something that can really affect a lot of the local people too. Tourists are here, a few weeks out of the year, and then they're gone usually. So I don't know, it's a tough one. I know that constituents out there are not going to be happy with any sort of a resort or sales tax or any of that. I've heard from loud and clear from many people that that's not what they want. And I'm sure we've all heard that. So, but it is tough. I mean, like I say, we're just in our budgeting right now, and there's going to be some tight budgeting going on. So, because we only have property taxes, we don't have income tax, we don't have any other source of income but property taxes. So it's interesting budgeting now. So that was it.
Well, just to chip in here, if you structure the 4% sales tax correctly, you do have enough revenue there to completely eliminate, we'll call it residential property tax for the primary residence.
Oh.
And to me, that is the most heinous tax, because you never own your property. You're always renting it from the government. And if you don't pay your rent, you get the boot. So it's an egregious tax. It's not a fair tax. It penalizes everything that's good. And a sales tax is simply more controllable. It's more fair. It's more equitable. It's more broad. Catch it all. You catch the retail establishment. You catch the e-commerce establishment. Typically spend up to what you make. But again, I'm preaching to the choir here. I'm sure it's just not going to happen. And I don't see a local option tax being something that's palatable. The way it was presented to me, it would be a non-starter back in our last meeting. So I don't suggest we move it forward.
Yeah, I would agree. And I think Commissioner Holmquist pointed out that it's basically the local people are going to pay a lot of that in a community like Kalispell or Missoula. I go to Whitefish, the resort community, a couple times a year, or I go to West Yellowstone a couple times a year. But I go to Kalispell and Missoula multiple times a year and maybe several times a month, just for other services that aren't available in the rural counties. And that's what you're going to see. I don't think it's probably the best solution for property tax relief going forward. Commissioner Logan.
Yes, thank you, Mr. Chair. So my internet dropped here just a bit ago, but so I missed out on Kendall's take on the local option tax, but I'm assuming it's something along the lines of trading one tax for another. And I guess if you think back to initially why this task force was formed, it's kind of broadly tax relief. And so when the local options sales tax was first presented, I'm thinking, this might work. But as the presentation went on, it became kind of clear that you're kind of trading one for another. So have we solved anything relative to what our original task was? So thank you.
All right, thanks. Well, I don't see any other comments out there. It sounds like to me that the majority of our committee does not want to move forward with the local option sales tax discussion. So without any objections, I will cross that off our list. So let's see, we've already talked about TIFs and newly taxable. We wrap those around the newly taxable in Senate Bill 511. Special improvement districts also, I think we can pull those up into Senate Bill 511, 1510 for 20 conversations. So other than that, did I miss anything out there? Ralph, did you miss anything we really talked about and haven't discussed?
I think I have everything. I've just I'm annotating the list of things, but what I have is we want to keep I understood that we want to keep looking at the property assistance programs a little bit. The notion of asset tests, means testing was still on the table. That we were going to keep discussing tax increment financing in a broad sense and sort of go back and look at the bonding extensions and other recommendations for improvement. Our number one issue is really all tied to that taxable value, newly taxable property, 1510-420 limitation in sort of with that Senate Bill 511 notion of flexible or diverse growth caps that account for the variation in the styles of growth in various areas so that we can control, but we don't inadvertently hamstring people in counties or local governments inappropriately. We took non-levy revenue off the table. We took the Montana assessment levy limitations off the table after much debate on local option sales tax. As you know, it's probably not feasible at this time, particularly if it doesn't reach out to things like e-services and other goods because of the way it affects local businesses as well, and just the express notion that your local taxpayers aren't always so interested in. TIFs and newly taxable property and special improvement districts would roll back into the 1510-420 Senate Bill 511 type conversations. That's sort of how I have it summarized. Did I miss anything?
No, I think you've got it covered there. Senator McGillivray, you had a hand up there.
Yeah, I just want to circle back here for a minute. And we mentioned the smoothing conversation. Is that in another subcommittee or is that in our bailiwick?
No, that's kind of in our area, but I to me that pulls into 1510-420.
Right.
Particularly when you have to do with fixed mills versus a dollar amount. Yeah, and so you kind of smooth that out, and that's where I kind of see that coming into play.
Okay, and then the other question I have is since we're looking at that in 1510-420, another thing that I just thought about as we were talking about, and as I was getting ready for the meeting, is the issue with, and this was brought up to me by someone yesterday as I was talking to them about big ag tracts that are not ag producing. And is that in a subcommittee where we're looking at that as I don't know how you address it, but again, they're getting ag rates, but not producing any ag product. So is that anywhere, or is that in discussion at all?
That's not in our groups, but the Department of Revenue has a working committee that's working on that right now with various stakeholders discussing that. So I see Cindy Johnson's got her hand up. Cindy, do you have something to add to that?
Yes, thank you, Chairman Hertz. I sit on that task force, and we are having that conversation, Tom, about ag land that's been taken out of production. and
Okay.
how to capture that in a fair way as part of the solution to property tax relief.
Right.
Great. All right. I want to open this up to some public comment too. So I see there's a few, we got some attendees out there. If you'd like to make a comment, please raise your hand. Right, I don't see any hands raised. I'll probably circle back around to that before we adjourn today. Commissioner Holmquist, did you have a comment there?
Yeah, it's more of a comment, so I was kind of waiting, but I had some discussions with Ralph about a week ago, and I just want to throw this out there. And we're talking about decreasing property taxes. And if I just throw out there, if we take the rate, decrease the tax rates across the board, every section of the board, and just decrease it across the board, how much would it be, or would it be beneficial, rather than trying to, lessen one, lower another, higher, increase one, decrease one, whatever. So it's just something for you guys to think about. I don't have any, answers on that. I just think it might be something we could just think about, because that's our goal, is to decrease property taxes for all, not just segments. And there's always a shift when we change one rate, lower one, decrease another, anyway, just a thought. So I see we're getting to get some discussion, so that's a good thing.
Yeah.
Thank you.
Well, when you change rates, obviously if you drop rates, those mills that float will go up. They float upwards if they're going to raise the same amount of revenue. So really your taxes, what you would do if dropping rates is basically those fixed mills, whether it's the 95 mills or permissive mills that a lot of counties have or schools have that are fixed dollar amounts, then those would raise less revenue. So it's kind of complicated. And just dropping rates generally hasn't been the answer, and that's kind of why the legislature has walked away from that since 2015. So I don't know, Commissioner Logan.
I think I'm going to say what you just said, but that seems to be the politically easy answer. I mean, at this point, but I mean, if I look at our city, when the market valuations went up last year, taxable rates stayed the same. We just adjusted our mills to get the revenue that we needed. And so what does that solve, I guess? So anyway, that's my thought.
Representative Fern.
Thank you. I've done some thinking about this too, and we've kind of touched on this on the Tax Fairness Subcommittee, that a unilateral drop will have unintended consequences as we try to get the mills. But perhaps what would be helpful is that, and just say every 5 years or once a decade, the Revenue Interim Committee needs to have the data in front of them as far as what is occurring within each tax category, as to look at whether it would be applicable for it might be a very modest adjustment. And so my point is that we all know that residential property taxes and in some counties, commercial property taxes have taken what might be said a disproportional increase. But it's also interesting to note what is going on with the other classifications. And if a classification doesn't increase or just marginally, would it be appropriate that they should increase? That we're taking in the appraisal process, but should we have the ability to analyze it and then possibly fine tune that process. So if you took like centrally assessed and you noticed, it's not moving anywhere, what should the reaction be? So perhaps just simply having a mechanism that automatically there'll be a review process might be helpful, and might be also provide some transparency and kind of force the issue of our revenue committees being aware of all the moving parts in the classifications.
No, it's a good thought, Representative Fern, and I think a lot of legislators and elected officials have learned a lot about property taxes in the last few years, and actually the complexity and how things move one way or the other. So Commissioner Holmquist.
Yeah, I think, and I could be wrong, but I think if we were to do a across the board cut on the rates, the entity probably that would be affected the most is the state. Because they're not under a 15, 10, 420 cap. And I could be wrong about that, but that's how I kind of look at it. So just discussion. Thank you.
No, there's no doubt about that. But I know Revenue Committee and other committees are looking at the 95 mills. And so they're not on autopilot and making that a decision of the legislature to decide what those mills should be set at and how they move up or down and where the money goes. So. All right. Anything else? I'm going to circle back one more time to public comment. If anybody out there on the attendees wants public comment, please raise your hand. Otherwise, it'll probably be your last opportunity to make a comment. All right, I don't see any. So our next meeting, the full committee meeting, is June 4th at 1 p.m. So before then, I don't have any particular dates yet as to when we will meet again, but I'll work with Vice Chair Galt and Ralph on fine tuning and as we go forward and what we need to discuss. So, and I think there's some, the taxpayer system. So we got 3 items: taxpayer system programs, the TIFs, and the big gorilla in the room, 1510-420, which we'll need to probably spend some more time on that particular issue, and probably get, as Kendall suggested, maybe do a little more deeper walkthrough on Senate Bill 511 so that everybody kind of understands how that particular item works. And I think there's some spreadsheets out there too that we can walk through on that. And am I correct on that, Ralph? Is that something
Yes,
that?
sir.
Okay. The other ones too, I'll work with Ralph and Commissioner Galt on maybe just some draft boilerplate language in regard to TIFs and how that recommendations might look going forward, and the taxpayer system program. So I think those 2 are pretty easy to maybe knock out and get some potential language in there that we all can look at, and then maybe moving those forward to the June 4th committee. And so probably the next meeting will primarily will be on the 1510-420 Senate Bill 511. And I'll try to work on a date on that. Might throw out another doodle poll and see when people might be available, but probably try to do a 2 or 3 hour meeting to get a little more detail and down into the weeds on that. So does that sound good to everybody? Anybody got any more thoughts, comments?
I would just add regarding 1510-420 and SB 511, I can speak from experience. You have a complex bill like that, was never discussed in caucus, comes up on the floor, and you see an increase from 1/2 the rate of inflation to 4% inflation, and there's immediately confusion. Is this increasing the rate of inflation or is this decreasing the rate of inflation? And what the heck does that mean about new property being added or not? Is that taking new property out of the equation, putting it in the equation? And I can speak personally, I was totally confused on the bill. And so I voted, confession here, I voted yes on second, no on third. Because frankly, as we know from this committee, is very complicated. And I kind of default to when I'm confused, and which is often, I default to a no. So there you have it. That's my opinion.
I would agree with you, Senator McGilvery. I think that's why we can spend maybe a couple hours on digging down into the weeds on something like Senate Bill 511. Ralph?
Two things. Megan Moore was paying attention to our meeting and sent me a couple reference things for property tax assistance, and on 1510-420, which I will send out to everyone. And I sent out an email with the template that we're using. So, and in the template, Ryan pointed out to me that it also includes, it's sort of the broad topic, the issue, and how we would like to advance it, but it also has room for dissenting opinions and, you know, what the concerns are. So you might want to look at that form that I sent out as we head to trying to come up with some things. But I also understood that the chair and vice chair will sort of make a first crack at our early ones, and I guess that will just be part of the discussion at the next meeting.
Yeah, that's helped. Another task force I'm on currently is if the chair and the vice chair, you know, with staff draft some recommendations, then we got a starting point where we can actually start discussing, wordsmithing it, and as we move forward to get it into the final report that this entire task force will be pushing out to the governor. So, all right, folks. If nobody else has any thoughts or comments, I think we can adjourn here. So, thanks everybody, and be on the lookout for our maybe a doodle poll in our next meeting. Thank you. Talk to y'all later.
Everyone.